Well, it's happening again. The gloves are off. The fight is on. I'm ready to battle my brother to the death again. Stick around, see the reason why. It should be a really good video today.
Want to make your money work harder? Enjoy another video with Adam Kahn, the rational investor on stocks, real estate, and crypto. Subscribe now for your weekly dose of investment insights and hopefully learn a thing or two.
So, what the heck is going on again? And why am I ready to put the gloves on again and fight my brother to the death? Let me tell you, it's about something I posted in another video I did, where I said something along the lines of like lather, rinse, repeat. And he responded to me a few days later saying, no, 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 it's rinse, lather, repeat, dodo. He didn't say dodo. I'm saying that now because I'm taking the gloves off. Now, at first, I thought, oh my God, I'm such an idiot. You're right. But then I thought about it for a minute and I realized, with a lot of these new soap dispensers that put out that foam instead of just like that soap that you normally get, there are plenty of times that I use that soap first, I lather up, then I rinse, and when I go back, maybe I repeat. So I'm not sure which it is, and I'm going to defend myself just because that's who I am, and I like to win those arguments. So do me a favor, put in the comments, let me know what you think. Is it rinse, lather, repeat, which actually makes more sense, but I'm still going to stand by what I said, or lather, rinse, repeat, because they're changing the soap dispensers similarly so that now we're getting a lot more of those suds than we used to get, and you don't have to rinse first. Just curious your guys' thoughts on it because it's super important. Now, more importantly and seriously, as much as I like to joke around, S&P futures are actually off more than 4% already. I guess it's beginning to get into the evening. I do have a little bit of concern that we're actually going to get down 7% and potentially open with what's called limit down. It'd be better if it was limit up. They have these circuit breakers in place at 7% for the stock market. If the market is down more than 7%, they will stop trading for 15 minutes to try to get things to settle down. When they reopen, if it drops another 6%, for a total of being down 13%, they will again stop trading for another 15 minutes. And if it falls even further, another 7%, where it's down a total of 20% in any given trading session, they'll actually halt trading for the day and reopen the next day. Now, that's supposed to settle people down and give them time to reflect and make things a little bit more orderly. What I get concerned about is if you actually trigger all of those circuit breakers, that it causes more panic. It gets people more upset because they can't get out of their trades. Now, hopefully we're not down 20% tomorrow. Hopefully it's just another rough day. But let me give you a little insight of the past that I've experienced and my concerns with what's going on, that I think we still have follow through to go. I was very happy to see what looked like some panic selling on Friday. It was the first time that the market didn't look super orderly and it looked like there was real nervousness and more people who just wanted out, which is a good sign. But unfortunately, similar to what we saw back in 9/11, this feels like the first punches to the boat. Now, I don't know, and I'm not going to say it's all about tariffs because I don't know if that's really what it's all about. To be fair to the people who were screaming gloom and doom for a long time, what they were correct about is there was a lot of froth in the market. Things were overvalued on a historical level. There are lots of ways to justify it and say how things are changing and maybe it'll continue that way. But for the most part, in time, valuations should make sense in terms of earnings and growth rates and things of that nature. If the tariffs actually stick, one of the concerns is not only was there a lot of froth, but earnings may actually start coming down, which despite the tariffs being inflationary, so this will be a little circular, it'll get confusing, that what ends up happening is maybe we're already stretched a little too far in the inflation world. When the tariffs come through, it's going to cause more inflation, but sales are legitimately going to drop because things are already stretched too far. Now, in the end, this could cause the inflation to actually come down instead of continuing higher. It's going to put the Fed in a very tough position, but here's why the Fed is always late to the party as well. We'll get to that as we continue along, and I'll explain that too. But as things slow down, the companies are actually going to have to do sales and cut their margins, which is what's going to hurt the earnings if that all comes to fruition. Where the Fed gets stuck, and the reason they're always late to the party, is the data hasn't changed yet, and they're not supposed to be reactionary to market movements. So just because the markets are dropping is not a reason for the Fed to come in and do an emergency cut. Now, maybe they have to in extreme circumstances where they see that becoming a huge problem for the entire system. But when unemployment is still okay and inflation isn't going in any direction too far, their job is to kind of wait for the data to come in, which is where they end up being late. Because by the time the data comes to the market, things have already happened. Because the reality is, if you're running one of these big companies and the stock collapses and sales start to slow down, the next thing you're probably going to do is start letting people go, and that's why the unemployment starts late. And then by the time the unemployment numbers go higher, we're already in a real rough predicament. But then the Fed comes to the rescue. They cut rates. They start injecting money into the system. The government does the same. They start building roads and hospitals and whatever else they do to give people job and give a real influx of money. That's where things have changed versus like the 1930s when we went into a Great Depression, because we didn't have those things in place. And in the beginning of it, we were actually still on the gold standard, so there was no way to just inject money into the system, which is all part of why we went off the gold standard. So I guess we'll see what continues. My best advice is do what you normally do. And as always, this is not financial advice. Please, by all means, you should not be listening to me or anybody else on YouTube. This should be entertainment purposes only. And you need to reach out to your financial planner and do your own research when it comes to making your financial decisions. Now, with all that being said, I'm waiting still. I want to see how it plays out because I really think we're going to have some pretty rough follow through. And what I think ends up happening is when the stock market really flushes out, anything else that's had fluff is probably going to follow. I think we're going to see housing prices come down as well as the interest rate. Now, the administration will be able to take a bow at that point because they'll say we made housing more affordable. Unfortunately, it'll be a scary time, and it's possible people will be losing jobs, and you'll see some unemployment and the economy looking really scary when those things happen. But to be fair, it was one of the campaign promises that was being touted when the campaign was going on. Lower house prices, better interest rates, more affordable to the average person. It is possible we will see those things, but it's not a fun process getting to that point. On top of that, what'll be really interesting is seeing what happens with gold prices and Bitcoin and some of these other things that are considered safe haven at the same time that the dollar is weakening. You would think if the dollar is weakening, the price for gold would go up as well as potentially Bitcoin. But what I really think is you're going to see what I'll call a money suck. You're going to see people who need dollars. So you're going to see gold come down, you're going to see Bitcoin come down, you'll probably even see collectibles and investments come down. Anything where people can actually get money to be able to pay bills and continue to live their lives. The real question is, do we end up getting in the stagflation scenario where does the inflation come through at the same time and life gets more expensive and you get in a really tough bind? I guess this is something that time will always tell. Now, I still say stay with your game plan because, as always, things play themselves out and eventually we'll get back to status quo. And if your time horizon is really 10 years out and you don't get upset about the ups and downs, I really do believe in 10 years Amazon will be making more money than they were making now, and the company will be doing better and be worth more money. But in the meantime, you could see a real big drawdown. And I'm not talking about Amazon in particular. I'm really just using that as a microcosm for pretty much any stock you have in the market. Right now, I'm more comfortable with companies like Target or Coca-Cola where I understand the business model. And despite the tariffs and inflation and whatever else may hurt the business, I'm comfortable with their earnings and the dividend they pay, that if they slow down, hopefully they'll be able to continue. But it's hard to know what it's going to happen and how things will play out in the economy as you see this all unfold. For those of you younger than me watching the video who've never been through a big recession or a big downtrend in the stock market, try to pay close attention because it happens enough that you should see it again in your lifetime. So you should get comfortable with the ups and downs. And every time is different. It's the same playbook and the same scripture. And my hat off, to be honest, to Warren Buffett, who actually liquidated a lot of his positions because he saw that it was overpriced. He also had concerns that he would see long-term capital gains rules change, which helped him push to be able to get out of some things. But in the meantime, he hasn't been tempted to buy anything back on these pullbacks along the way. And I'm guessing he's sitting and watching and shaking his head, going, I told you so a little bit. But what a great trade. What an ability to be able to cover. And similar to what I'm trying to do, my guess is he's waiting until things are a bargain because they tend to go from too expensive to too inexpensive. And it takes time for all of that to play out. Now, I'll still go back to don't listen to me, don't follow what I do. I really don't mean to be a gloom and doomer, and I'm not gloom and doom. I just think I see what's happening in the markets, and it's hard for me to imagine they just catch themselves and this is a buy the dip type of opportunity. I think you wait until something becomes a real steal, not where it looks inexpensive. And if it doesn't get to be a real steal and you miss the opportunity, at least for me personally, I'm a lot more comfortable with it than trying to pick a bottom because it's very hard to do that. But if I'm watching specific companies that I want to be getting long in, I will have price targets that I'd be thinking of, but I'd also be waiting to see earnings and what things are looking like and how they're playing out to understand if I think those price targets are still good. Because if the earnings are dropping, well, the price targets might need to come down as well. The thing I'd really be cautious of are companies like Palantir or like Spotify that my son did, but he's only 13, 14 years old. My God, the time really does fly. And his time horizon is so long that I wouldn't mess with any of that. But I'm a little bit older. If I had things like that that have really been high flyers, the air gets sucked out of those things the most, typically. Again, not financial advice. I don't want anybody owning Palantir, selling it, it catching itself, it shooting back up, and you looking to me saying, well, that guy on YouTube said Palantir is going to fall a lot. I'm not telling you it is or it isn't. I'm just telling you those things were the things that had the most fluff in them. And when real events happen that really push markets lower, the fluff really does come out of them. And if you go back to the internet bubble, the NASDAQ fell 90%. I wouldn't be so shocked to see that happen with a company like Palantir or some of the others. There's no reason that they can't. They drove up that fast. They could come all the way back down. And if they're a good company, it could create a great opportunity to pick something up at a really bargain basement price. Now, similar to Warren Buffett, I do try to stay away from companies I don't understand, which is why I never owned Palantir. I'm jealous and I would have liked to, the way that the stock flew up. But I really don't understand the company and I don't want to be investing in things I have no concept on. The other thing is, while I say these things and tell people to be cautious or, whatever it is that I'm suggesting about waiting and being patient, know that for me personally, I've talked about having different accounts. My set it and forget it account, it's not like I'm making any changes to it. Even though I'm a little bit older, my timeline is still 10 years out or longer. I really try to think of that account as something that's locked in a safe deposit box and that I really don't play with it all that much. And the stuff that I have in a trading account is pretty easy to get out of, use it for paying bills, and just use that to be more patient with. I don't want to see people going crazy or overreacting. The markets can get very emotional, which is why I think they tend to get both undervalued and overvalued. And I would say stick with whatever it is to do your job. And if you pay bills and whatever else, and just be good at that and not worry about all of it so much, other than like I find it fascinating. If I didn't enjoy this stuff, I probably wouldn't have individual equities. I'd probably just own VOO, QQQM and maybe SCHD or something else. The funny thing is, I actually took a look at SCHD to see what their top holdings were because my thought is if we have a real drawdown, the ETFs that are the most oversubscribed are going to be the things that people are going to want to sell, which is actually what's going to drive those company prices lower than where I think they should go. As people sell VOO, for example, well, what ends up happening is the fund has to sell the underlying equities because the money's being withdrawn from the ETF. Same with SCHD. So some of their top holdings are going to be great companies. If we have a real correction and the markets really get cracked, people are going to need money and they're going to do the opposite and get out of these ETFs, oversell them, which is going to require the company to then sell the underlying equities and push those too far. So I started looking at the top holdings of some of these ETFs to just kind of have in mind, are there things in there that I might want to eventually add to my portfolio? Because if they get oversold in the ETF, it's going to drive those equities further down than they probably should. I see that as a potential good opportunity. Again, I'm being very patient. I don't plan to buy tomorrow. I would way rather see a rocket ship down and a rocket ship up and me not buy and the economy end up doing great and us coming to agreements on the tariffs and everything else. But my concern is our leader right now has a big ego, and I hope I'm wrong about that. I really hope he's just doing what he should be doing and playing tough negotiator because he's probably very good about it. But unfortunately, the Chinese, I'm pretty confident they do have big egos, and they're probably not going to back down. When the speech was given on Wednesday, and I said this in some of the other videos, one of the things that was said about the tariffs was if any country retaliates, I'm going to re raise and re retaliate double whatever the retaliation is. So we imposed 34% tariffs on the China. They ended up retaliating and putting on 34% tariffs onto us. If we end up retaliating and now putting on 68% additional tariffs onto China to stand by what was presented at the meeting, I'm quite confident that China would then put 68% tariffs on us. Unfortunately, and fortunately in some respects, they would rather drive their economy into a recession and a depression and not worry about their citizens than lose face. That is such a valuable thing to the Chinese and how they operate and how they run their country that they're just not going to lose. What I worry about is if we have a leader that is in the same thought process or mentality where he doesn't care about the people and just doesn't want to lose. I would hate to see this blow up in a full on trade war where we stop trading with partners and really cause some real damage. The other thing that's going on is even if it were reversed, unfortunately, unfortunately at this point, I think we've done some damage to our relationships that were probably not well trusted. And anybody who would want to come back to the table with us is going to be a little tentative and a little nervous. So it's going to impact international trade in some aspect, almost no matter what, pretty much guaranteed. I understand we're a real good consumer base that everybody wants to do business with, but there's a point where it's like they'll turn and they'll start looking to other partners and maybe not include us. It'll be interesting to see how it plays out. I do expect the dollar to get weaker, although I was pretty interested to see that that wasn't the case right now, at least with the Japanese yen. So we'll have to see how the dollar continues going forward as well. And just as an update for where the markets are right now, the S&P futures are down a little more than 200 points, which equates to a little over 4%. And Bitcoin, the last I saw, was trading around 77,000 per coin, which is down a little more than 5%. Now, keep in mind, especially the futures market at the mercantile exchange, sometimes those markets are thinly traded. So, again, same thing. I would rather see the market catch itself in reverse, which is quite possible sometimes with these thin markets. Sometimes they get exaggerated, just like the regular markets, because since they're thinly traded and not everybody watches, they can sometimes get pushed really far. squeeze out the nervous traders and potentially reverse the other way. Now, 4% is quite a big move, and the fact that Thursday and Friday were pretty big down moves had me think already that people are going to come home from work on Friday, see how much their accounts are down, get nervous, and possibly put sell orders in for Monday. If that's the case, I wouldn't be surprised to see if this follows through until tomorrow. Of course, I'll wake up early in the morning and check the markets and see. I'm imagining if it does, we'll see some more panic, which is actually good for the markets, because the worse the panic gets, the faster it flushes people out, the quicker we can get to a recovery. Now, Powell once said that you don't have boom cycles after a boom cycle, and you need a crash to wash people out. I think he was happy when he saw a soft landing coming along, but unfortunately, it looks like that is no longer the case, and we're going to have a rough landing in some form or other. I hope I didn't ruin everybody's weekend. I actually had a great weekend with my family. I hope you guys did as well. Before I forget, before I go, and I might ramble a little bit more, do me a favor and smash that like button. Hit that subscribe button if you haven't already. Make some comments in the comment section, even if it's about hand washing. If you make it till the end, do me a favor and just say something about that in the comments. I love seeing that. Super cool, and I appreciate it. I'm not going to ask every video because otherwise people are going to figure that out. But either way, as you guys know, that really helps YouTube's algorithm, and I appreciate that a lot. It's been cool to watch the channel grow in general. I like getting my thoughts out on here as well. I also think about, one day, and forgive my sick twist in mind, it's a way for my family, like if I pass in another 20, 30 years, for them to be able to go back and kind of feel like saying hello and seeing me chat, even if it's about nothing they find interesting. So either way, I hope everybody enjoys the content. I love the conversations in the comment section, so thank you guys. And don't worry too much. As long as you got your job and your health and everything else, it's all good. Oh yeah. One last thing, and if you get to hear this, like by all means, feel free to chat about it. My idiot buddy, and he's a good buddy, and if he sees this, which he doesn't watch YouTube, like he's an idiot just for that. But he's talking to me. He wants to open up a restaurant. Now, I've been in the restaurant business. If you're watching, please, no, let's not do a restaurant. Like we've talked about opening a business together. We're bouncing different ideas against each other. He used to own a bunch of auto repair places. I had the restaurants, but now I do mortgages, which I think you guys know. And I was a commodities trader before. I love the idea of like running a company and trying to make something grow. I don't love the idea of working and being at a shop and attached to it. And he doesn't really know the restaurant business and the headaches that go with it. He went and visited another friend of mine's restaurant that is doing unbelievably well. But he is a phenomenal social marketer that has a huge following, and he was a food blogger that also has like dozens and dozens of food blogger friends. So I'm trying to explain it's not that it's that easy and he's just gone out and opened up a restaurant. He's taken years and years of doing his social media. So now that when he's opened a restaurant, and don't get me wrong, it's a good restaurant, but he has the ability to get the word out there incredibly well. So it drives people to the door. Then when his friends who are also food bloggers come in and they start talking about it creates this hype and this Instagram, famousness that gets lines out the door. Just opening up a restaurant or any business for that matter without knowing how to actually get the word out there isn't so simple. It doesn't mean we can just do a better job and people find it. I understand you can go to somebody else's business and take a look around and think, man, I could tweak this and tweak this and tweak this, and we'd have an even better spot. But getting people in the door is not so simple. So, Steve, buddy, I love you. If you're watching, which I know you're not, but at least I can gripe here. Let's not do a restaurant. I'd rather just hang out and go to lunch at somebody else's restaurant than get back in the business and deal with all the headaches that come with owning a restaurant. Anyway, again, give a thumbs up, like, subscribe, make some comments in the comment section. Do any of you own a restaurant? I'd be curious your thoughts on that. Have a great Sunday, and I'll talk to you guys this week.